Market watcher Eddie Ghabour is here to chime in on this. So, Eddie, Trump used to brag a lot about the markets, taking credit completely for himself. I'm just wondering, do presidents get bragging rights about what happens during the market?
Look, I think anytime you have a strong market during your presidency, they're always going to want to take some credit. But let's face it, a lot of times the policies that are put in place, it could take a year or two for it to actually filter into the economy and actually be impactful to the overall markets. I think the biggest concern right now is this inflation risk that this current administration has had a big part in, and how the next year of the market's going to perform, because we are about as bearish as I've been in my career with this setup because of the inflationary problem that is persisting, and it's not going away.
Yeah, and it's not just inflation. I mean, there is still a possibility that we may see some kind of tax hike. The president floated an idea at one point about doubling the capital gains tax. I mean, that could take a lot of capital off of the markets, right?
Yeah, look, if you increase capital gains while inflation is where it's at, and while the Fed is forced to accelerate their tightening because they got inflation called wrong last year, you don't want to be in front of that freight train. You would see massive losses. That would be a worst-case scenario if you add tax hikes on top of what's already coming. I can't express this enough. This is why we started getting very cautious in November. The economy is slowing down. Inflation is staying sticky. Oil continues to go up, and you're going to have the Fed tighten into that environment. That's going to be a very, very difficult place to be for high-risk assets.
And we were just talking to Larry Kudlow about that. The fact is the president kind of threw his support behind the Fed tightening. He knows it's going to be coming. He was kind of telegraphing yesterday that he was going to support Jerome Powell in whatever's necessary to cut back on inflation. So while that's good news on the inflation front, it's not such good news on the market front.
No, it's not. And look, if they're aggressive in their rate hikes, you're going to see a reset in this market. It'll probably be a great buying opportunity. But if they are really aggressive, you look back what happened in the 80s when they tried to tame inflation, right? You should expect to see a minimum of a 15 to 20% drop in the broader market if they are aggressive in their rate hike. It's going to be interesting to see if they actually follow through with that, because at that point in time, you're going to see the 10-year start to come down. And while they're raising the short-term rates, now you have a potential inversion of the yield curve, and that's when you start to lead into a recession. So all eyes will be on the Fed next week, and of course March, we'll really see how aggressive they get with rate hikes.
Fasten your seatbelts. It's going to be a bumpy ride. Eddie, good to see you. Thank you for being here. Appreciate it.